Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Looks like it's about 76 degrees out here. And this is our, God, what is today? March 18th already. Man, we're almost a quarter into the year. Or it seems like it's just flying by so fast. Oh, look, got a couple guys out here looking for treasure. A couple, it looks like. He's got his little metal detector going on there. And there's a tractor looking for the bodies on the beach. Sorry, just kidding. Actually, that's a tractor. It picks up all the seaweed every morning. We're a little tourist town, so they don't want that nasty, ugly-looking, smelly seaweed on the beach when the tourists get up in the morning. Let's move along to some things here that I'd like to discuss. And the first thing is, God, if I had to pick a single picture that described our federal government and let me just say, not even the government. Let me say our the Fed, the Federal Reserve, and central banks all over the world. One picture that describes what they're doing and how they're doing it, it would be a Jenga, this Jenga picture right here. And that is exactly what I see going on. I think that we are only a couple blocks away, and I don't know how long it's going to take to pull those blocks out or who's going to do it. And my analogy there is more or less is what administration, will the Jenga tower tumble under the Biden administration? Well, I kind of was thinking that it was going to tumble under the Trump administration, but as I've always said, don't ever underestimate the power of the Fed. So, I'm at that point now where I can't believe that the Fed and the central banks all over the world have held this tower together as long as they have. Before the COVID virus, before that virus, we were in great financial trouble. Before the virus even. We had big financial troubles going on, and nothing changed since then. In fact, all it's done is gotten completely worse. Unemployment is way up. Businesses are bankrupt all over the world. The environment is really bad, and I don't know why people are pretending it's not and that it's going to get better. This tower was on a verge of collapse in 2019. I mean, just on the verge. Don't ask me how it didn't collapse in 2019, but the tower is still standing, and it's still standing under the new administration, and still standing under the Fed's. There's the Fed's hand right there, pulling out one Jenga block at a time. And actually, I think this tower, if I was to look at this, I couldn't find a tower that had more blocks missing, because if I could, I would have used it, because that's exactly where we're standing. Our tower right now across the entire world, not just the United States, probably looks like this with no blocks except one block in the middle in each one, and about ready to fall. But again, never underestimate the power of the Fed. Really good article here written by, these guys are great. Gold Switzerland writes some good articles. Matthew, I think it's Peipenberg, and then there's another guy named Ergon or something that writes articles for these guys. Beautiful, always well written, and let me go over this. Getting ready for gold's golden era. Worry about gold sentiment? Don't be. The mainstream view of gold right now is an open yawn, and that's true. And sentiment indications for this precious metals are now at a 3-year low despite gold's high of last August. Gold and silver hit a high of last August. What did gold? Almost $2,100 or more, or something like that. And I forget what silver had hit. It was above that $30 level for sure. And now we're at we're at 3-year lows despite gold's high of last August. So, investors have very short attention spans, especially the big institutions. They can't make money unless they're churning accounts, unless they're buying and selling all the time. They make money on their commissions, getting in and out of stuff. They're not the type that just sticks their money in something and forgets about it. And most Americans like that, and a lot of investors are like that, especially new investors. They're constantly in and out of different types of stocks. Their attention span is about 5 seconds, and then they're off to something else. The newest, biggest, greatest thing. So that is kind of true. Is this genuine cause for concern? They ask, that gold is kind of like at a low for the last 3 years, and there doesn't seem to be quite a lot of interest in it by the general public. Not at all. And as they say, in fact, quite the opposite. Most investors are totally wrong about gold. And before we show, rather than argue why they're missing the forest for the trees. Unlike trend chasers, and this is what I just said before I got into this part, speculating gamblers and gold bears, sophisticated precious metal professionals and historically as well as mathematically, conscious investors are not only calm right now, and that's why I've been very calm, because I'm a sophisticated investor, and so are you. They are biding their time for what is to become gold's perfect backdrop, and pardon the pun, the golden era. And again, that's why I haven't been nervous about these downs that we've been seeing, gold and silver. I see the writing on the wall. I know exactly what's going to happen, and I've been quite calm about it. And the reason my shows, with gold prices being lower, as you notice, my shows are getting a little longer. But I'm just trying to assure a lot of you new folks that haven't been watching my videos, and a lot of you folks that are brand new into gold and silver, not to panic, relax. This is pretty much the norm for us, and our day will come here very shortly. Understanding the current gold price. As for the current doldrums in the gold scene, explaining the same is neither difficult nor a surprise for those who understand history, debt, and inflation, and Fed speak, all highly correlated themes we have addressed separately and carefully in prior reports. Again, these guys write some good stuff, I got to admit. Rising rates. For now, the simplest explanation, and again, they're going to go into the raising of the treasury rates is supposedly why precious metal prices are down. But again, I don't entirely believe that. I believe there's a lot of monkey hammering that goes along with these higher rates. When the rates go higher, I believe that I'm not sure if it's government or financial institutions or maybe both run into the precious metal markets and just hammer the shit out of them during the same time. That's my opinion, because I really don't believe, even with today's treasury rates going up to 1.65%, and it didn't have that much of a significant more impact on gold. Gold got hammered the last couple of weeks. In fact, it's kind of holding steady even with this higher treasury rate. Again, I think that the higher treasury rates are just a good excuse or a good backdrop or a good way to hide the monkey hammering that they do with precious metals. Again, that's my opinion. So he talks about rising rates here. Excellent article. Highly recommend you read it. Getting ready for gold's golden era. It's done by Gold Switzerland. I think they also sell gold and silver and precious metals, and I really like their articles. And again, I don't mind showing you their website either, because I am certain that I can beat their prices as well. But no less, boy, they write some good stuff. Like I said, I think I said that 5 times already. Boy, it must be good if I said it 5 times. So rising rates. Why rates will be suppressed. And again, we've talked about this many times, but these guys, I love the way they write it. They explain it so simply without getting too complex about it. So let's, why rates will be suppressed. And again, this is something we've talked about many times. So let's start with rates and why they can't get much higher near term, and hence pose a long-term threat to gold's much higher price rise down the road. Using the U.S. Fed as a perfect proxy for delusional as well as desperate central bankers around the world, we can do some quick math to see a very clear path ahead for gold. As the Biden administration adds another $1.9 trillion of stimulus debt to an already historically toxic debt pile, the U.S. will be sitting on over $30 trillion in government debt before Q1 of this year. We're almost done with Q1. With its economy on its knees, and we have been, and tax revenues dwindling, well, think about that. 50 million people unemployed, where did the tax money go? Well, it's gone. This debt, and hence U.S. deficits, will only get higher and much higher by the year end. Now let's compare this currently to the pre-pandemic math of 2019, when the overstimulated economy was running hot. It's simple math. And again, in 2019, we weren't in good shape, folks. I mean, I think last year the virus pretty much took everything else, the past, out of everybody's mind. They've forgotten about what happening before that. But anybody that is under the illusion that the economy was doing great, and I know the last president said how great it was and everything. Well, it was only great for the Dow, and it was only great for people that could qualify for near zero loans and make money off it. It wasn't great for the average working person. It wasn't great for the average businessman. Not at all, in fact. It was better than it was in 2020, and that's maybe why people now think how great 2019 is, because how awful 2020 was. But it wasn't good at all, folks. And the reason that we've had so many problems, working class people rioting and getting uppity and getting mad and everything like that, is because of that money wasn't trickling down, and the lower income people, lower income people were getting stiffed, and the middle class was getting stiff. Again, 2019, from 2008 to 2019, the only people getting rich were people that were involved with financial institutions, people that could borrow money really cheap. That's it. and maybe some businesses were doing well. To think that 2019, 2018 economic times are great, no. But again, once you went through 2020 with the bullshit we went through last year, everything looks great besides that. And that's why that when the economy starts picking up after these closures are done with, these ridiculous, stupid closures that we never needed, once those are done with, you're going to start to see businesses picking up. You're going to start to see the numbers rising up substantially. But that doesn't make a good economy. Again, everything is going to look great compared to 2020. But don't confuse that with good. You see what I'm saying? I hope you got that point there. Let me move along here. But if we fast forward, calculator in hand to 2021, well, hold on. Let's move back here. I'm sorry. I did skip a few things. During that time, the U.S. was spending $4 trillion per year and taking $3 trillion in taxpayer revenue. The net result was around $1 trillion in annual deficits. Okay, that was for 2019. Again, this deficit was a strong environment where interest rate expenses in U.S. debt for 2019 was around $400 billion, roughly 10% of the spending. But if we fast forward, calculated 2021, and again, remember 2019, there was nothing great about that, but it's still better than 2020. But if we fast forward, calculating here in 2021, the picture and the math turns very dark and very quick. At $30 trillion of total debt and counting, if rates were allowed to rise much higher, and again, this is a topic we talk about all the time, and I keep telling you, don't worry about Treasury rates rising too high and ruining the gold prices because they can't allow that to happen. And we're going to go over why here again. If rates were allowed to rise much higher to anywhere near the historical normal range of 5%, that would mean $1.5 trillion in annual interest rates for Uncle Sam, which would equate to 50% of the national revenues rather than 10%. So, as I've been saying, and as people way smarter than me have been saying for quite some time, actually since 2008, that they can't raise interest rates much higher than where they are currently at 1.65%. They just can't do it. If they do it, they'll bankrupt the United States, they'll bankrupt all these other countries, they'll bankrupt the Dow, they'll bankrupt, the whole system will collapse. So basically what they're doing right now is with these low interest rates, they can't afford to raise them, but they're almost in a no-win situation here. If they don't raise them, you're going to see major inflation coming up. The fact is that there's nothing they can do to recover from this, folks. All they can do is just keep plugging the dam, with more fingers. They can keep putting little patches on this leaking dam, but at some point the whole dam is going to explode. And this is why guys like me are very calm about gold and silver markets. I plan on living another several years. I hope at least, or more. I'm keeping my health good, but you never know. Anything could happen to any of us. But no less, I do have plans on being a little bit longer, and this is why I'm calm about precious metals, because I know that this dam is going to burst at some point, and my gold and silver holdings are going to just skyrocket through the roof. However, is that a good thing? It's a good thing that I'm covered and I'm not sitting on dollars and maybe a stock market that's going to take a huge shit and take my retirement with it. But it's probably not a good thing overall because, if gold goes to $5,000, $10,000 an ounce and you're looking at $500 silver, you may be looking at a gallon of milk is $50 and or $100. So is that a good thing? Not necessarily. The ideal situation is your silver goes to 500, your gold goes to 10,000, and all the prices stay the same. But, folks, that's not reality. You are not going to become a billionaire by holding on to gold. What you are going to do is you're going to preserve your retirement money and you're going to preserve your wealth and your income. That's what you are going to do. So don't expect to get rich because if metals just fly through the roof, so will everything else. And that moves on to the next subject, inflation expectations. That's what I was just talking about, is when you start to see metals fly through the roof, you're going to see major inflation. They're going to go hand in hand. However, the nice thing is that the gold should or probably will keep up with that inflation, maybe even do better, hopefully. As for inflation, I'm going to read the rest of this. That too is plain to see coming as a cavity is to a dentist. Right now, rates are going up because investors and markets anticipate that inflation is going up, which is true. But the real politic most gold bears are forgetting is that rates won't go too high for a simple reason. Again, the Fed can't allow or can't afford or allow them to. And again, that's exactly what I was just talking about a couple of minutes ago. So we won't go into that again. I'll just be repeating myself. The Fed's linguistics struggle with the transparency. That's kind of a longer article, and it talks about the Fed being transparent, saying where they're putting money, who they're giving money to, who they're bailing out, who they're not bailing out. And we've all known that the Fed has had zero transparency, and it's owned by a bunch of private people. It's not a government-run organization. It's owned by private people who make money off it. So there's something wrong with that as well. That's why I've always been a big fan of Ron Paul, who's been always put up legislation years ago for getting Fed transparency and ending the Fed's stranglehold on money. Other temporary gold headwinds, in addition to the temporary but real headwind for the rising of fear of rising rates, again, which is temporary. Remember, I've always said that it's just temporary. The dollar strength is temporary. Treasury strength is temporary. There are other forces at play taking flows out of gold and other dangerous yet real directions. And again, something else we've talked about many times. God, they did a really good job breaking this up into little pieces, so I'd highly recommend you read this. Wild speculation in risk assets. Towards the end, one key culprit is the delusional yet for now quite profitable degree of rising and wild speculation in risk assets like tech stocks and cryptos. Such speculative euphoria, which, by the way, always ends in disaster and always peaks before it tanks, is always equally as bad for gold. And again, there is money flying into tech stocks and into cryptos, and that is taking some money out of what used to be the best place, or still is the best place, but temporarily it's taking money out of the gold markets here, which is, again, equally bad for gold, which is a safe haven rather than a speculative asset. That's why others informed contrarians favor it. Needless to say, when uninformed retail investors can make 200% on GameStop or dream about Tesla and other balance sheet challenge stocks with their fingers on the trigger of an openly discredited Robin Hood Act, gold will look and perform quite boring during such times of unstoppable fantasy. And that's kind of where we're at right now. This fantasy and this idea that they're going to get rich off of GameStop, or people are going to get rich off of. I mean, there have been some people, but trust me, folks, it's not going to be most of us. In short, speculative fever, along with perception of rising rates and a rising dollar, takes money out of gold, and it has taken some money out of gold. But again, I'm not worried about that. People will realize at some point when that shit just crashes where the safest bet is, and they will find out that is. The safest bet has been around for 5,000 years. But rising rates and a rising dollar are just flash headlines, not long-term realities, for all the reasons discussed above. But the far-sighted smart money doesn't invest or preserve wealth based upon headlines or fantasy. Instead, they look to hard math. And that's exactly what we're doing here, folks. We look at the hard math here. Keep the bubbles alive, repress rates. The Fed is repressing rates for quite some time, but sometime it's going to blow up in their face. More currency debasement, something we've talked about again for a year. I won't go into that. That by printing more and more dollars, all they're doing is just devaluing our currency and going to cause major inflation issues. They say instead, gold serves as a safe haven hedge against tanking currencies and rising inflation. Again, we all know that, which is precisely where this broken world is now clearly, rather than theoretically, heading. It's true, folks. So if you plan on living in the next couple years, if you plan on being around for the next several years, you're going to see some amazing things with precious metals and some disappointing things with the economy and the stock market and other markets as well. Vaccine miracle ahead. They talk about the euphoria that will be short-lived, and again, we talked about that. 2020 was such a god-awful year across the entire globe that any positive news and anything that's positive is going to look way better than 2020. And like I said, 2019 was kind of a suck year. 2018 was. We haven't really gotten out of the 2008 problem that we were in. They just keep, again, patching up the holes in the dam. That's all they've been doing. Meanwhile, we are going to see better numbers, because as the country opens up, Florida's opened up pretty much fully now. As the other states and countries start start to open up, numbers will start looking better than they did in 2020. But again, anything is going to look better than 2020. This is also going to provide some euphoria for people that think the economy is on its way and it's recovered and it's gotten better. And that may also cause gold prices and silver prices just to stay the same for a little while. But there's going to be a rude awakening when everyone discovers that things aren't all hunky-dory, and that just because things are better than 2020, it doesn't mean things are fixed. In fact, they're even worse. Measuring true rather than speculative wealth. Despite the current confluence of factors of rising rates, dollars, wild speculation, post-COVID normalcy, pulling money out of gold, the long-term towards which history is marching boils down to this. More inflation, more money printing, and more currency devaluation is ahead of us. This means those who measure their wealth in dollars, euros, sterling, yen, etc. will be measuring shadows rather than substance. This is why I love these guys writing. That is such a great line, that they'll be measuring shadows rather than substance. Isn't that beautiful? As for the sane measuring and preserving of wealth, gold is #1 asset to which informed and prepared investors can earn. For now, this key asset is undervalued, again what I've been saying, buy the dips, or just sit and hold, and provides a massive opportunity not only as a catch-up trade poised for an inevitably much higher valuation, but far, far more importantly, gold will be triumph in its critical role of preserving capital in a debt-sick world marked by dangerous speculation and openly dying currencies. Well, folks, if you want to protect yourself against the Jenga tower that is on the verge of collapse here, but that the Fed, you see the Fed's hand right here, has managed to keep the tower afloat or keep the tower standing. But at some point, this tower is just going to collapse, folks, and it's a good thing that you own gold, silver, and platinum. That's my opinion. Let's take a look at 10-year Treasury rates today. I looked and take a look at that. They're up 1.64%. Again, at some point, the Fed is going to have to cap this. I think typically in the past we have been, the average rate has been around 5% here. I think in the last 50 years or something like that. And if you look, we had, crazy interest rates during 1981. And what was happening during 1981? Again, when they talk about treasuries, rising treasuries killing the price of gold or hurting the price of gold, well, here's an example right here where that was the complete opposite. 1980-81, this era right here we're looking at here that I'm moving back and forth on. Look at interest rates, 15%. I think they were even higher. This is probably adjusted for inflation or something. Probably even higher than that. And gold was at its all-time high. So what does that tell you, that people that claim that, well, if treasuries rise, that's going to kill the price of gold? Well, why didn't that happen in 1980? Anyone have any clues? I don't. So currently, I'm sorry about that. Currently, we're looking at 1.62%. And another thing, take a look at this chart. This chart has done nothing. I mean, we peaked in the 1980s because, we were in big trouble back then at some time. But look, again, we got off the gold standard in 1971 or so. Rates kind of buffered around here, and then we got into some big financial troubles. And it has been downhill for treasuries ever since. So you see that little blip up to 1.6%? You see that blip up to 1.6%? That is only temporary. Take a look at these little blips here too. So this is just a temporary blip that we're looking at here momentarily. Let's move along here. I'm not going to go into too many articles here today because I did read this one. Again, highly recommend you take a look at this. It's done by Gold Switzerland, Getting Ready for Gold's Golden Era. Very, very good article. I think I actually found it on ZH, where you can find it for free, or you can just type it in your browser. Good article. Recommend you read it and refresh over that. GATA.org. Not too many new articles on here, but this is on your bookmark. I suspect that you're reading this before I do if you're doing your homework properly. Jay Taylor interviews Goddess Secretary on gold suppression policy documentation. Again, I highly recommend you read this stuff because for years and years, people said that you were wearing a tinfoil hat if you said that gold and silver prices were manipulated. Well, now it has been proven true, not by just people that write articles, but by the government. The government has fined and charged people with doing this kind of stuff, suppressing the price of metals. However, Gada gets into some more interesting things where it might be the government suppressing the price of gold. And again, I highly recommend you read this. These are not people that are living in their garage just making shit up. These are very intelligent people that talk about this stuff. And if you read this, you will be smarter than the average bear, and you will definitely be smarter than the average Wall Street Journal, Bloomberg, or CNBC Business News talking heads. That's for sure. I'm going to move away from gata.org. Not much to talk about here, and move into yesterday's show and answers comments from yesterday's here. A few comments here. Yesterday's show was about video was $2,500 gold and $50 silver this year. And again, based on what I've been talking about, I've just been waiting for that dam to finally collapse, and we just haven't seen it yet. And again, I think because of the numbers are going to look so good compared to last year that people are going to mistaken the better numbers, compared to last year with recovery. And it will be a recovery to some degree, but is it going to be a recovery that's, are we not broken anymore? I don't think so, folks. I think that the recovery is just going to bring us back to our old broken down, even worse, and even worse than we were in 2019, and that's pretty factual. But again, it's going to the numbers that we're going to see coming up. When you go from zero, like say for example, we were doing 80 miles per hour in 2019. Well, all of a sudden, 2020, the year of the virus, we went from 80 miles an hour to like 10 miles an hour. Now we spent a whole year going 10 miles per hour. So 2021 comes up. The economy starts to pick up a little more. Now we're going 40 miles per hour. But is that back up to speed where we were in 2019? Not at all, folks. Is it seemingly faster and better than it was? And our memories are fairly short, so we'll only recognize what happened last year. Yeah, it'll seem like it's a great recovery, but the fact is it will not be. Again, that's my opinion. I'm going to go over the comments here. Yesterday, Robert Jones, pretty sure that itching in your throat is called COVID-19. No, it's not, Robert. If it is, I've had COVID-19 for 10 years because I get that scratchy thing in my throat when I talk too much all the time. I just got to take a sip of coffee. And in fact, I'm going to do it right now. And as far as COVID-19, I don't even know if I've had it or not had it. I'm not too worried about it, though, Robert. I'm in great shape, so I have a very good chance if something happens of doing okay with it. Juan Vega, God will soon expose all the lies. Well, Juan, I think God did that many, many, many years ago, and the lies have been exposed already. You just got to be able to open your eyes and see them, sir. Thanks for watching, Juan. Johnny Incognito, under what scenario will JB choose or be forced to stop manipulating the PM prices? Anyone? It's always been any day now, can't go on. Well, not many people, I keep hearing about how JPM is manipulating, or JB Morgan, I'm sorry, JP is manipulating prices. I believe that JP was the one that got caught for manipulating, spoofing gold and silver prices, and they got fined. Was it JP? Or one of them did. But I forget which company it is. The company that I think is most scary out there is BlackRock, and that's a company not many people hear about. BlackRock controls the ETFs. I think they control GLD or the SPDR fund or something like that, a lot of different ETF funds. They're the big 800-pound gorilla in the room. But no less, I think the days of them monkey hammering precious metals are getting less and less, and their days are going to be pretty slim here. Don't know what to say on that anyways. Sorry, Johnny. Thanks for watching anyways. Rick Hayes, see everyone on the moon. I'm not sure what you mean by that, Rick, but again, thanks for watching. Mark Magner, spot and physical have separated. $30 is the real price of silver, but not the fictitious spot. Even COMEX has raised its requirement deposit to secure a contract before you can take delivery. How, in good conscience, can you advise against paying more than $5 over silver? Actually, I didn't. If you watch the show again, Mark, from yesterday, you'll notice that I was saying try not to spend more than $5 per ounce for premiums, but you can buy silver for $3.50 to $5 per ounce premium. My recommendations yesterday were simply saying, not to not buy silver, but to try to pay less than $5 per ounce for premium, because product is available out there for $3 to $5 in premiums. When in the same breath you discuss the price will increase and the COMEX and dealers are experiencing difficulty in acquiring any silver. Hell, your title says $50 silver, but don't pay more than $30. Well, again, I think you might a little confuse what I was saying there. I was not saying not to pay over. I wasn't saying not to buy silver. I was just simply don't pay more than $5 an ounce. You don't need to, Mark. There's plenty of silver out there that you can buy right now that's going to cost you between $3 and $5 per ounce as a premium. So why in the hell would anybody pay $6 to $8 premium when they can get it for cheaper? That's all I was saying. And if you take a look at the video again, you'll see that that was the whole point. You haven't even mentioned inflation. Oh, Mark, man, you haven't been watching my shows. We've been talking about inflation for a year now. And what about rent? Rent has tripled. This is all stuff we've talked about over past shows, but I can't do it all in one show, Mark. So sorry about that. But hey, thanks for watching. I really appreciate it. And if you start watching more of my shows or go back and watch some of the past videos, you'll see that these are all things we have discussed over and over. The problem is that I discuss this stuff daily, and at some point it just sounds like a broken record. So, I got to give some of these things a rest once in a while. Keep It Real says the squeeze and raid brought many new faces in the space. However, the effects are far lower spot prices and obscene spreads and unrealistic premiums for the retail purchases. In my opinion, not really a win. The resulting increased costs are not exactly a gain for everyone. Congrats, laughed my ass out loud, good move. The squeeze and raid brought many new faces. That is true. It did bring new faces into the precious metals market, which was really a positive thing. I was cool with that. However, the effects are to lower spot prices. Not really. Spot prices have just simply been monkey hammered for the reasons that we talked about earlier in this show and probably 1,000 times in my past videos. So I don't necessarily think that's true. Obscene spreads. The obscene spreads are because somebody actually has to physically own this product. Say, for example, you stock 1,000 ounces of silver as a dealer. You've got 800 ounces in stock. You can't find it out there without paying an obscene premium yourself. However, you don't want to load up too much because if you do, you could end up, premiums could start to drop and you could end up with overpriced premiums. So if you've got a good inventory and you're not selling an awful lot of silver, you still got 800 ounces, and again, I'm just making these figures up to make it easy. You still got 800 ounces of silver out of your 1,000, but if you go out to try to replace that, if you sold it, it's still going to cost you stupid money. But meanwhile, you don't want to be paying a high premium while you're fully stocked. Because at any time premiums could fall as well, and what would be the point of that? It wouldn't be a smart business decision. So there's a lot more involved than that. Keep it real. And actually, if we should be pissed at anything, we should be pissed at the obscene low prices, the low paper prices, not the spreads and not the premiums. The real issue here is ridiculously, stupidly, artificially low gold and silver prices. So if you're going to keep it real, you got to know who to blame, and it's not the physical markets. King Toba, nice to see you're watching. As far as 10-year bonds, you can see in my video that we talked about this plenty of times. Keller Robert, no, you are probably actually number one, sir. And you are number one in my book. Undistributed Kingdom, well done. Thank you, sir. Thank you for watching. Man VO, I was looking at 2100, but you believe seem better than mine. Kind of lost you there a little, sir. It sounds like you misspelled there something, or again, a loss of thought there. Go ahead and comment again today, and I'll try to answer your question. William, love you too, man. And it's a freaking real world, and we are fellow Americans, and that's why we all are here to help each other. Psycho Killer, like to see and to believe, but $2,550 sounds nice. You will see it, sir. And that may be a conservative figure here down the road, but you will see $2,500 and you will see $50. Trust me. And again, I don't know. My thought that it would be soon into this administration or soon into 2021. But again, I started rethinking this and started thinking, well, listen, if the numbers and they're going to spin the numbers. If the numbers are whatever numbers that are better than 2020, it's still going to people are going to think, oh, that's great, things are getting better, employment's up 20%, but not really. It's not going to be close to what it was in 2019. Just the numbers are going to spin. Everything is going to look better compared to 2020, and I think that's going to give the false illusion that the economy is better. And when people finally realize it's not, it was just a mild recovery, then the shit's going to hit the fan. And again, that's my opinion. Well, that's really about it. Going to look at prices here. Last night, man, it was at 17.55, I think around 10 o'clock at night. We dropped back at this morning's New York prices. Look like they've lowered a little bit. Let me hit the refresh button because I haven't refreshed this in 20 minutes. Yep, down a little bit, and again, probably has something to do with monkey hammering of the gold and precious metals because treasuries are up a little bit. What did I say, folks? Buy these dips. Don't worry about it. If silver dips below 1700, again, big frickin' deal. Just buy the frickin' dip. Same thing with silver and same thing with platinum. It's only temporary. And again, I'm going to sound like a broken record if I start repeating why. So again, good opportunity to buy the dip. Look at that high last night, 1755, and silver 2665. So it's bucking the whole way down, that's for sure. Again, great time to buy the dips, and the only reason you're seeing this dip right here is because of artificially low or artificially low gold and silver prices that are being manipulated by the same people that manipulate currency markets. That's my opinion. Well, best products out there are still bars. They are by far the cheapest compared to coins and everything. The gold bars are around, averages around 85, 90 bucks over spot for small quantities. 90% U.S. silver coin and 100-ounce bars are still the cheapest product out there. It looks like 1-ounce rounds are going to start to be coming out a little bit more and more, but the premiums are still quite high on that stuff. Well, that's really about it. Don't want to make this show too long. If there's any questions, give me a call at 954-493-8811. Happy to tell you what the deal of the day is or the best prices are out there, or answer any other questions that you have. Please make sure you like the videos here and subscribe. I really appreciate that. And if anything crazy happens today, I'll do another show. If not, I will talk to you tomorrow. Hey, thanks, and have yourself a great day, and talk to you soon.